The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, doing the 8 a.m., 1.5 hours before the market really opens. This is 8 a.m. Eastern Time, pre-recorded, but it's live right now. You can call in at 877-927-6648. And it wouldn't be surprising to me if at noon, when my show normally would air, where I'd be live, the market is just somewhere kind of where it is now. The S&P futures up 75 cents, stuck in a trading band for the last, this is the fifth, 1, 2, 3, 4, this is the sixth session. Let's see if on the sixth session we can break above 26.98. I think it's going to be a little difficult to do. The MACD in the daily chart is pulling back. It's crossed negative. Stochastic is still good at 84%. That shows some internal strength. It's above the 9-period exponential moving average trading band, I think. I think we're looking at 2692-ish resistance. And on the downside, support is at 2682. So this is kind of the 120-minute chart really tells the story right here. Let me just open this up and you can see. Look. You got that big, larger rectangle formation. You made a high in the E-mini. This is the, here we go, the March E-mini at 26.98. Peak C1, peak C2 in the Chapman methodology. Look at the MACD stochastic fading. All the rallies have been in the containment area. It's getting narrower and narrower. Look at that rectangle formation. Rectangle formations can last a lot longer than your patience. So 26.82 on the downside, 26.90. Ooh, yeah, let's make it 92 on the upside, kind of a range. Let's get out of this and go through a bunch of things that we'll look at here. When we're looking at the markets, a couple of things are going on. So if you're looking at the Dow at this particular point, you've got the Dow making a high on the 18th of December, all-time high, 24,876. Since then, narrow trading band in a falling axe formation. That means lower highs, slightly lower lows. 9-period moving average of 24,665 has been broached, but it hasn't been crossed. The low yesterday, I wasn't even close to that. However, there are some internal signs that are saying some weakness is going on here. I wonder if I can just do this, the YM. Let's go to the futures right now. And the futures made a peak E on that high of the 18th, stuck in a trading band. This one has more like a flag, you know, when you're looking at the golf course and they have this little flag here, like a pennant. So this flag with slightly higher lows and slightly lower highs coming to an apex right here with the MACD crossing negative. That's just a sign. It's not the sign, but it's a sign of some internal weakness. Stochastic at 85%, over 80% is good, and on-balance volume is kind of flailing here, way below the high that was made on the 18th, but still holding kind of decently. It's really the weekly charts that are going to be most important, and that says to me that if you do not make a new high over the next few days going to the end of the week, that we've made some kind of a short-term top here that could start to see some profit taking early in January. That's really the way I'm looking at it. It'll take a move in the Dow itself, the cash Dow, that is the Dow index. It would take a move into the 25,000 area, and I'm not sure it's quite ready for that now. And I contended all along 22,000 would be resistance. 23,000, 23, right through, 24,000 right through. Now I think at the 25,000 level, chop, chop, chop. I think that's going to be a roof. It's going to be a barrier. And I'm completely wrong. If there's a close, it doesn't even have to be a pop. Just it must be a rally and a close above 25,100. Something else is going on. It'll force even more people into the market rather than having a digestive phase. I think a digestive phase would be really healthy. But healthy schmelthy. You know, you can see runners, marathon runners, you can see runners all the way up. You look out your window, you see people running. You don't know what their health condition is. You can be running with some terrible internals and keep going for a long time, but eventually it catches up. So we're going to see what happens here. So let's make it real easy. We're going to go to the QQQs right away because the QQQs failed yesterday because of Apple. Today, the Qs are 156.43 down 9 cents under the 9-period exponential moving average. Now, this is very interesting because of the semiconductor index, the SMHs, which have been acting really poorly, having a double top high at 105.83 on the 22nd of November and the 24th of November. Look what happened. It gapped down, left an island reversal. I didn't want to put that in because it was a little messy. I can do it now because it's quite a way back. That island reversal, never a good sign, breaks down, slumps to 95, well, 105 to 95 in the SMHs. Look at that deepest correction it's had. 89.72 to 80.92. That was 9 points. This is 10 points. Yeah, this is the deepest correction it's had in a year, maybe. So this is something serious. There's an arch formation forming in the weekly chart. My suspicion is that in January, the 95 support is going to go and that the SMHs will be taking a really well-earned breather. You've got some fantastic stocks there. And let's just go through these one at a time. You've in sectors. So I wanted to go to the SPX.X. That's the S&P cash at 2680.50. Here again, you've got this falling X formation, lower lows, lower highs, and much lower lows. However, it did not break the low of the 20th of 2691.01. Yesterday's low was 2677.96. Did I just say something wrong? 2676.11, and yesterday's low was 2677.96. Yeah, so that held, and the 9-period moving average of 2675. I think that's going to be taken out in the next couple of days. Maybe today. We don't know yet. Let's look at some other things. If you look at the IWM, and the IWM has been a laggard. Will it make the leg D? Now, I spent some time over the last week or so discussing the IWM in great detail in terms of the Chapman wave and an alternate count. My contention is that the low of 134.12 in the weekly chart, the week of the 18th of August, while it broke by 11 cents, the low of the 19th of May at 134.23, that was still one big move to the upside. And therefore, that E is really an E on the week of the 9th of June is really an E/A, F/B, and it goes on to a G/C and a D/D. So that means you've got a D right here. That makes sense. If there's a new all-time high above 155.41, fine. But I'm contending that this is a Chapman wave double top of peak C1, peak C2. In other words, that C2 failed, had all the characteristics that said, gee, it just needed to squeak a little higher to make the leg D and failed. Therefore, I'm calling it a phantom peak D, and we'll see whether that holds true. Any move above 155.41 is really good action, starts another leg up in the weekly, and I'll then call that a real leg D in the IWM. Why do I talk about these? Because in the Chapman wave methodology, we're always looking at the fourth highest peak Ds where other things can happen. That's all we need to keep in mind. A couple of things now, just we're going to go to gold. Gold is actually up 7.70. It's worth talking about it. As soon as I get back, we'll talk about the single leg A up in gold. Very strong, stopping at the 200-period exponential moving average in the weekly chart. Is this the start of a much bigger move? And is the dollar trading down going to suffer because of that? Dollars at 93. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Yes, I was asked in the den, is this live? I'm live, but I'm in the early hour. I'm doing the 8 to 9 o'clock Eastern Time slot, and it'll be repeated at noon. So whatever you're looking at right now, real time in the Dow, if it's my usual time for the show, the prices could be different. But anyway, we're looking at the dollar at 93.01. It's broken support. Now, I was looking at this chart when I drew these fighting patterns. The one is the cup and the other is the arch. But there was also something that's called the Chapman Wave falling axe, but it's inverted this time. You see the trend line here? In fact, to be even more accurate, I'd probably have to draw it there, but it is exactly the same pattern that we look at on the upside when you got a long handle and then you got slightly lower highs, much lower lows, and that creates that cone, that expanding cone shape pointing down. And now we've got the expanding cone shape pointing up, and the dollar just took out very important support. We went long for subscribers to my opening call the very day of the 70-week arch formation, up and down. That low gave us an entry point. Well, it's held kind of okay, but now it's starting to fail. And the benefit has been to gold, and gold, in fact, has done very nicely. It's got the single leg A to the upside. I suspect that right here at 1287.8, that we're looking at some kind of resistance, and that resistance could allow it to have maybe a day or two pullback. But I cannot argue that it is changing the complexion of the characteristic of the monthly chart, but we've still got a few days to go. If the monthly chart closes back under the 9-period exponential moving average at about 1282 and goes under it on Friday, that says, you know what, nice struggle, but we probably have seen most of the gains in gold, and now it's going to pull back. Dollar could just rally again a little bit, but I'm not sure it's going to take out the most recent high, but it could at least rally. and that allows gold to take a little bit of a breather as it goes between 1278 and maybe 1272-ish, somewhere around there, maybe or 66, and it has a containment area that says that's the support. I'm not going lower than that, and that would be, for me, at least the first real sign to say that the weekly chart MACD is starting to stabilize, and the histogram, these little red vertical lines, this is daily on the left, weekly in the middle, on the right is the monthly, allows this histogram to go eventually positive. The stochastic is still flat at 23%. That's not good. And the unbalanced volume has had a pretty decent spike. So I'm watching this and I'm saying, okay, absolutely fabulous move in gold from just under 1240 to 12 over just over 1288. Maybe it's time for a little bit of a breather. Cannot rule out that this is the start of a much better move. But look, I'm just going to grab a few names. Look at GG Gold Core. This is in leg B to the upside. RGLD, which is Royal Gold. Very nice move in a leg C, a much better move actually. Not all of them are participating. Yesterday we had FNV. We had Ari call. Ari's always looking at gold. Done just really beautiful trades in gold. But this one's lagging. I'm just trying to think. ASA is the one that I always look at as kind of a benchmark. We know sometimes we traded, sometimes we it was entirely my area subscribers. It had all the characteristics. I just didn't do it because I thought we are long dollar. Why? The technicals of the week did not look that great. But no question about it. Beautiful move in ASA trading at 1140. This ASA Gold is like a gold fund. Makes a low of 10.56 just 2 weeks ago on the 12th. And lo and behold, 1056 goes to 1140. What was the high yesterday? 1141. That is a really good percentage move. And it did it in a left side, right side price time match. It has until today. Is that today or tomorrow? Until tomorrow to do the Chapman wave left side, right side price time match at 1143. GLD did it already. Look. It did the left side, right side price time match yesterday, but I'm looking at the left side high of 123.33, sorry, 122.43 as really the target. Whether it is a pullback here or not, I'm going to see, but this is good action. It hasn't broken the downtrend line in the weekly chart, but you cannot ignore the fact that gold was a participant in this market over the last couple of days. Now, a couple of things. I needed to, I want you to go on. I want you to show you high-grade copper. So high-grade copper is having a little bit of a pullback. Yes, it's 3.272. It's gone into leg B. This is brand, look, it broke out in the weekly chart, F/B. Monthly chart is a leg E. Look at the monthly chart. That is a huge cup formation. And if I do my Chapman wave, left side, right side price time match, we've extended to the right. Therefore, I have to take a different area. But it is, if I do this right now, just do it real simply, grab that, put it into what my eye says is the midpoint now that I've got to look at, right there. No, that's not, that would be there. So if I put it there, we're already beyond. So I'm going to take it all the way to what I call the Grand Canyon start of the cliff to the downside, put it to the right. Now I can take it all the way to, even there it doesn't work. Wow. Look, if I do it to the midpoint, I like the plumb line to be exact. That's always perfect if I use the plumb line. If I do the plumb line, we're already there. So that says we've got to use, this is where I love to use the mathematical side, that if that doesn't work, you have to use a little artistic license. But I have a particular way I've shown subscribers in my courses that I like to do. Look, it's got until next, let's do this. I'm going to keep it here for now. And if I look at the inside Chapman wave inside wedge, right there, copper says that it should make a high, and I always go to the first high right here, of July of 2014, 3.442 by next month, by January, if I'm using that. But my eye says, no, you're probably going to have to move out a little bit more, and that's probably correct. And now I can do, I can use my artistic license and say that that high right there is going to be the high that I'm looking at. It could do it before. I just want to be as cautious and conservative as possible. So I'm going out 3 months, 1, 2, 3. And that says by the 5th, by May. Oh boy, that's a little too long. It says at least by April, we should be hitting the 3.35 area. You could do it sooner, but this is what I like to do. And this green line is the Chapman Wave inside wedge repellent target line. And every time it gets there, it gets repelled. If it breaks out, it's going to go to the all-time high. All right, so that's copper so far, very good. Where's the support in copper? 3.19 to 3.16 is key support on the shorter term. 3.15 is support in the weekly chart. Okay, so we did that. Let's look at crude oil. So crude oil back at the ranch is having a little bit of a rest here. It's in leg, I'm calling it F for now in the weekly chart. Still a leg A in the monthly. So that's a big difference there. And what we're really looking at here is that within the context, so this can be either way. It's going to be A, B. Oh, man. So this is very interesting. That looks like a B to me in the weekly chart. That says crude oil should go even higher over the shorter term. Wow. That's very interesting. Crude oil at 59.57, down 40 cents. Looks to me like it wants to get to the 60.80, 61.30 area. Very interesting. I'll be right back. So this is the early show being recorded and repeated at noon to 1 o'clock Eastern Time, and the futures are up 2.7.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, so we're looking now at 8:30, 8:30 in the a.m. and Eastern Time, so any news that came out has barely impacted the market. The TLT is up 38 cents. My thinking here is that the yields have had a spectacular short-term move to the upside, especially the 5-year. Now I think there's a little cooling off period. If I'm correct that the market is having a digestive phase, which could accelerate a little bit more into January, then I'm thinking that the TLT has a chance to bounce at 125.14 yesterday. Right now, 125.54, up 40 cents. My thinking here is that if it goes to 126.70 to 127.30, that could start to see some pressure on the market. We'll see what happens there. In the meantime, back at the ranch, the TNX, can I go there? Daily, weekly, monthly? No. So the TNX, which is the 10-year, has made a peak C in both the daily and the weekly chart. It stopped in the monthly chart. Right, this pink line goes all the way back. And when I say all the way back, have a look at this chart right here. See this cup formation goes to a second like a soft W formation. Still hasn't broken the trend line, and now keeps squeezing. Here we go. Look. Look at that. Way back from the crash of 1987, October, saw a big spike. It had actually made a higher price earlier than that. Look, right there. It made a high, I think that was in 83? 84. In 84, it makes a high. Let's call it 140. This gets smoothed out so these prices aren't accurate because it's a continuous contract. So let's call it 14%, right? And it comes all the way down, and it goes down to like 11% right there, and then it pops up. But look, this downtrend line with the Chapman Wave inside track within the down channel, the pink line and the green line. We haven't broken above the pink line yet. We're getting close. I just put this in here to say that in terms of what we've been through over the last 5 years, maybe just over 5 years, 6 years, we're kind of in the same range. Nothing's changed. A lot has changed in the market because look what the impetus it's given for money to flow into the stock market, all-time highs. So this is close to all-time lows, but we are starting to make kind of a base that says, hey, we've got a very interesting article sent to me about money flow and just looking at what's going on in the market, the financial market, which is not being discussed. And it's really interesting that, in fact, this person makes a claim about wages that actually just talking about wages and actually the number of participants in the wage earning market. It's just really fascinating because it gives a slightly different interpretation. So that next year, just every single person you hear who comes on either in whatever news it is or interviewed on CNBC or even Bloomberg are talking about the fact that this should be an impetus for a spectacular 2018 and that this is a stimulus. You never know how things work out. And all I can say is that when I'm looking at key stocks, when I'm looking at the metrics of saying what's going on in the economy, let's look at H. What is that? That's Hyatt. Look, all-time high leg, E in the weekly leg, F in the Hyatt hotels so it's F in the, there we go, F in the weekly. This is F in the monthly. Yeah, it could recycle, but that's at least what I'm going for right now. And a little double top, made a peak F at 73.33, made a cup formation, spiked above it, pulled back. Is this a G or a brand new B? I'm thinking here, if you try to book at a hotel, I mean, it's really difficult. Yes, you've got choices and all that, but the rates have gone through the moon. They really have in many of these places, especially if you go to Manhattan or Brooklyn or any of these major cities, Boston, crazy prices. So I'm looking at this and I'm saying, I think that if we're looking at the HLT, let's go to Hilton, HLT, Hilton Worldwide, peak, a leg D, little doji, two doji candles right here, Technicals are not as good as they were when it made that B right there in December. Now, did it hit 80 round number high? 79.96, just missed a round number high. Only leg C in the weekly chart, that's still positive looking out, and a leg E in the monthly. This says to me, we could be in for a little bit of a digestion period, and it's reflected in one of the best sectors, the sector that really highlights the public's participation in this mega bull market, and that's worldwide hotels and resorts. That's what I'm looking at. I think Marriott is doing the same sort of thing right here. Marriott made a peak F at 135.18 on the 21st, 2 days of pulling back, no big deal. But a leg F in the weekly and a leg D in the monthly, hey, at best it should just be pulling back to the 130, so it's just $3. But if it takes out that 130, you could go quickly to the 127 level in the weekly chart. So I'm looking at this, I'm saying, I don't see how this could be a brand new move to the upside yet without a digestive phase in this whole hotel resort area. I'm just making it as simple as possible. Could be absolutely wrong. All of a sudden you're looking at Marriott at 137 or 140 and Hilton up 2 points or whatever. But this is just the way I'm looking at it, just to be as pragmatic as possible. Let's look at the EUR-USD. This is pre-market. It's trading at 1.189. It needs to get above 1.190, which was the high of the 20th of December, to start a leg C. I wouldn't be surprised if this actually does make an overlapping Chapman wave C. So this goes to peak C and then kind of fails at 1.196 on the 27th of November, has a cup formation, creates another set of highs. And within that context, the MACD and stochastic are not great, but they are improving. We'll see, because if there's a failure and it goes under 1.183 in the next week and a half, that's going to say, uh-oh, rectangle fighting pattern, H goes to a lowercase m. But so far, this is good action, spectacular lowercase h to m in the monthly. We discussed that, went to a lower low. The technicals were rallying sharply, and then it took off and went towards the 200-period moving average in the monthly of 1.2169, which I think will be hit at some point, especially if the dollar, which I thought was going to be a little stronger, actually isn't. So USD JPY, now this is the one that kind of went together a little bit with the dollar. It's stuck here. It's at 113.21. It needs to get to 113.70s to really show that it's got strength and it can go higher. But it also has to hold 112. What is that? Around about 112.80, 112.80 for the USD JPY. That's the dollar-yen currency pair. I think I've covered just about everything that I needed to do. I wanted to just show, so this is important to me. Look at Home Depot. Leg D, spectacular move, rising wedge formation daily. Monthly, the weekly is in a leg F. Hey, this could have recycled. I'm calling it F for now. I have no reason to call it anything else. It spiked above the long-legged doji with a tiny doji, which would have been a Chapman wave silent doji failure pattern. No, it broke the new recovery high. I'm calling this F in the daily and in the weekly, and the monthly has gone to G/B. Spectacular looking chart. We'll talk about that when we get back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman. So I had a question about, the question is really, please assess the ZBH8 bond contract. Where's resistance as you see it on the bounce from 150 and a half low. So I'm looking at this. If you don't mind, I'm going to, I've had some trouble getting the bond contract, but that's okay. I can get you, I'm going to show the 30-year, 10-year, and 5-year yields in the weekly chart, because I think this is, for me, this is the one that gives me the best, I guess you can call it the best feel for what's going on, because I'm looking at the 3. So the yield curve is flattening. What most importantly, we're in a leg C. There could be an alternate count here. I'm not going to call it. This is a leg C in the weekly chart of the 5-year. And it's gone significantly above almost all the other highs over the last year or so. What's really important is that we had a failure pattern in the market starting in about late November going to December and then collapsing in January of 2016. So into late 2015, 2016 comes the sharp decline in the general market. It had been occurring. We're at all-time highs. But that peak C failure had the characteristic of the bonds yield, the 30-year, the white one, TYX already pulling back, the 10-year pulling back. This is a slightly different pattern. We've had a new leg C up in the 10-year, and the 30-year is in a trading band, having made the arch formation, could now be turning around. You remember alternating. It's my rule of alternation, where the ellipse continues. The cup can go to an arch. Most importantly, what I'm looking at here is now I think that the 30-year is kind of stuck in a bit of a range. So let me use the 30-year, and I'm going to say to you, if the 30-year T bond pulls back, the 30-year yield with a high of 28.77 the week of the 22nd of December should be broken, and that would start another leg up. But here's the trend line resistance, and that should use the yield as a good benchmark, because at 29.20, that yield is saying, you know what, I want to touch and maybe even break that peak B that was made on the week of the 27th of October of 29.80. as it stands right now, I just think it's stuck. I could draw a rectangle, right? I don't like to do that. It's getting too messy as it is. A rectangle like this, and I'm taking it away right away. I'm going to do this. I'm going to fill the color of blue just to show you. Yeah, I'll keep that. Okay, that's not too messy. That rectangle just says the 30-year is stuck in a range. This is a cup formation, and it says that the 10-year TNX, if it takes out the high of last week of 24.99, in other words, if it goes above 25, 2.5%, that is either, if it's next week, it's leg D, if it's this week, it's leg C. And that's saying, hey, the yield curve is changing. This is the first time in a long time we've seen this. Watch out. And that, I think, could be impactful to the market. And that's really what I'm thinking, is that the 5 and 10-year have been let loose. They're on their own, and that you might get some kind of a pullback, but they're up in the higher range. The 30-year is kind of more moribund. It is just staying in a range. So here's my answer. I think that bonds, the longer-term contract is just kind of stuck for now. I think the shorter-term contracts are going to show much more volatility. And if the 5-year at 22.34 really takes out this week's, what was last week's high? 24.99, 24.90. If it takes out this week's high of 24.90, wow, it could really quickly test that going to the 25s. That's what I'm a little concerned about. And that's what I'm thinking is going to be an extraneous event. It's not going to be all this talk about how taxes are going to, you don't know about taxes, and it takes a long time before you see the impact of taxes. You don't see it as a long time before the spending, like the giving money away for workers, as some of the huge companies have done for the season, $1,000 bonuses and things like that. That's something different. The actual impact won't be felt until mid-year next year, I think, about really what's going on with the taxes. Should be good. We just don't know about all the extraneous things that could happen. I think yields are going to tell you the story. Here's another clue. You see that the weekly chart of the HGX, the Philadelphia Housing Index, 347.70 was the high the week of the 8th of December, and it hasn't taken it out. But these are two good candles, right? It's kind of tiny, but you can see that you haven't gone above that, and you haven't gone below the red one. But what's really interesting is how does wood, the iShares Global Timber and Forestry ETF, which really was the precursor to copper's big move to the upside, is saying, hey, I'm holding this trend line, this latest very sharp trend line of about 48 degrees, 50 degrees. I'm holding it pretty well. And at 70.45, if wood, W-O-O-D, that's the symbol, if it takes out in the next 2 weeks, if it closes under 69, I would like to say 69.50, but I'm going to make it 69 to be safe. You've got an arch formation that says, for the first time, you're starting to see some kind of a breakdown where it hasn't had one cup formation broke to a new high. This cup formation says, if you fail here, you've got to think of this arch right there. Make this bigger. An arch right here. That arch has been quite significant, especially if it takes out a low of 68.44 that was made the week of the 8th of December. That's the week that the HGX, the housing sector, made its high, all-time high, and now it's not struggling, but it hasn't broken it. So that's very important. I was asked if I'd show the chart one more time. Every once in a while I show this chart at the back here. Gosh, can I get it? There it is. Is this the one? Let me just check. No, this is not the one. This is a gold chart. I can't find it right now. So there is a South African one. It's here. There it is. So that's the ZA. Let's see if there it is. Okay. I was asked if I'd shown the monthly chart of this. Yeah, this is the industrials. Don't get confused. This is the South African Dow Jones South African Stock Index. So it's made up of South African stocks, but it's the Dow Jones Index, and it's almost testing at least I don't know if these are all-time highs, but pretty close to the 414s high that was made back in November of 2007, and then 420s high that was made in May of 2011, and this is peak D. And then April high of 2015. We're actually broken above that. So yeah, isn't that interesting? And they do have some mining, but mostly it's the industrials. I'm trying to think, what was the chart yesterday? I said, this is exactly what I wanted to ask Larry Pesavento. Oh my, oh my, oh my. What on earth was it? It was just perfect. It had the 20-min, when it has an equal, I call them the U shape or the arch formation, and you got a left side, right side price time match. No, have I forgotten what it is? I can see it right in front of me, the chart. Did I not write that down? Did I not write that down? I did not write that down. Was that, was that in the USO? Was that the pattern? No. Oh, I can picture the chart in front of me, and I just can't place it right now. I'll be back. Basil Chapman. This is the pre-opening market analysis. This will be recorded and played back 12 to 1 o'clock, and we'll see where the market is. The S&P futures up 2.75, Dow's down -5. We'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. Basil Chapman. So the futures right now down 4 in the Dow, up 2.75 in the E-mini. Congratulations, Albert. Just sent me an email. We had a good year. Congratulations. I know you worked hard for that, and that's great. Here's the USO. This is the price time match, where you come down from, in this case, peak D, the week of the 6th of January of 2017, come all the way down to the low that was made on week of June the 23rd to 865, and you come running back again. That inside track worked pretty well. It just didn't make a recovery high in leg E. It waited to test that high yesterday, this week, I mean. So this is acting very well, walking the 9-period exponential moving average. So USO crude oil right now and gold are just about to be bumping into resistance, just purely technically, and this is going to be very important what happens over the coming few days, and we'll be watching that one very closely. So just before we wrap up, let me just say that this is a show, a pre-recorded show, and it'll be played again at noon till 1 o'clock, and this is so we don't know what the markets are doing. Right now the futures are up just a tad, and I think it's going to be a narrow, very narrow trading range day to day. So with that, we're just about to close. So I wanted to look at a couple of things. So asked about, what was it? Yeah, I spoke about the bonds, spoken about crude oil, and what's really important about this is that we don't know what comes along to aggravate the market. So far, everything is this is Goldilocks, right? So we have to say what could disturb it, and I think that yields, maybe crude oil spiking even higher, although in the very long term, I think crude oil is going much, much lower because of all the competition in the energy area. But right now, crude oil is acting very well, and that says, okay, watch out. And most importantly, if you're looking at some of the stocks, you know, we saw Apple took a hit yesterday. Today it's coming back a little. No, it's down 7 cents. I think that Apple is a mature company. I've been saying that all year. That's not to say that you can't invest it, but you've got to think of it more as a kind of a dividend play. It's not one of your big cap real leaders like a Google or an Amazon. It's in a different area now. It's not debasing the company. It's just saying think of it a little differently. So Basil Chapman signing off, and have a great day, and we'll see what the market is actually doing live at 12 to 1 this afternoon. This is being recorded.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.